Welcome back to Markets Today. I'm your host, Mbitha Mwema. It's been an interesting season for the Nairobi Securities Exchange this week, as we have seen the blue chips begin to announce their results for the just concluded period. Earlier in the week, Safaricom announced its first half 21 results. The profit after tax was down 6 percentage points to 33 billion. This particular performance came at a very interesting time. We are all bearing the brunt of the impact of COVID-19, not only on health, but also on the financial health and business environment, not only in Kenya, but globally. To help us understand these numbers and unpack them, as well as understand the future for Safaricom, we are joined by Ilana Darcy, who is the Acting Chief Finance Officer of Safaricom. A very warm welcome to the show, Ms. Darcy. I'll hand over the conversation to you. And my first question to you would be just take us through what is happening with these numbers. Give us an overview of these numbers. Over to you, Ms. Darcy.
Thank you. Thanks, Mbitha, and thanks for inviting me here today. So I think our performance reflects the economic situation that we're operating in. Pandemic has impacted a lot of companies, both within Kenya and across the world, and we were supposed not spared from that. If we unpack the performance a little bit more, so our service revenue declined 4.8%. That's a decline of 5.9 billion shillings in absolute terms. And if we look into the specifics, M-Pesa is the biggest driver of that at a 6.1 billion shilling decline. So it really speaks to the response, our response to COVID-19 in terms of zero rating the transactions and the impact that had on our P&L. If we strip M-Pesa out or park M-Pesa a little to the side, I suppose I'm happy to note that it might be marginal growth, but we did see growth in the business on the top line, excluding M-Pesa. And if we double click that a little bit further, in quarter two, we saw better performance. So again, excluding M-Pesa, service revenue actually grew 0.7%. So we're happy with the momentum and the progress made in quarter two as we carry through into the second half of this year. Back to you, Mbitha.
All right, fantastic. Thank you so much for that, Ilana. So yes, there was a drop, but you are saying that there was a recovery in the second quarter. So when we are looking at the financial year for Safaricom, that's starting in April, the financial year ends in March, but starts in April. And that's also around about the time that the COVID-19 hit home in Kenya and there were extensive regulations. I want us to dig a bit deeper when it comes to the revenues. Give us an overview of what was happening in Q1, in Q2, and also help us understand the revenue trajectory when we look at M-Pesa, when we look at service revenues, and more so data. Because during the COVID period, we had a lot of people saying we're starting to use fiber to the home, more on uptake in terms of mobile data. Maybe you can help us understand that. Over to you, Ilana.
Yeah, thank you. Thanks, Mbitha. So if we look at quarter one versus quarter two, we had a tough quarter one. I think most people did. The restrictions really only came into play at the end of March. So from April, I think as a country, everyone was getting used to working from home, the restrictions on movement and the restrictions on travel, and we did see pressure. So we saw voice under some pressure, and obviously voice is a large part of our revenue portfolio. So when voice is under pressure, it does impact performance. And we also saw the fixed enterprise space under some performance, with closure of offices, etc. We did see some pressure, especially coming from SMEs. So if we look at quarter one, our service revenue declined 8.4%. But then in quarter two, as the restrictions eased, as the economy began to open up, and as I suppose we got used to, operating in a new type of environment, we launched a few innovations. We launched some successful voice promotions, which really helped the performance. So quarter two, the service revenue actually grew 8.3% quarter on quarter. Just, I suppose, showing kind of the impact of all of those factors together in our performance. And we're happy with that kind of going into the second year, I think, as I had said. With data, we saw a big demand for fiber to the home. We've seen great uplift from our home business. we're really happy to report that in Q2, the growth that we saw from mobile data actually more than offset the decline in voice, which is a great place to be in. So the fundamentals look good going into the second half. And M-Pesa, when we return to charging, we'd expect the performance of M-Pesa to course correct. So yeah, we look forward to that and that part of the journey.
All right.
Back to you.
All right, thank you so much. So, Ilana, I hear you saying that second quarter was much better than the first quarter. In terms of understanding and unpacking consumer behavior, were people then calling more, or is it that the market dynamics from a competitive landscape changed? What I'm trying to get at is the onset of COVID-19 came in with a lot of fear in terms of people trying to hold back and to hold money back and trying to say, I don't know what is going to happen, so I'd rather not spend. Now, Safaricom sits in a very interesting place because of its interplay with different sets of the community and society, especially when it comes to M-Pesa. So what are the trends when we look at number one, disposable incomes, if we can use the M-Pesa visibility and transactions as a yardstick. And then secondly, were people fearful and talking more, or were they fearful and saying, I'll probably not talk in terms of usage per minute? What were the social constructs that you saw evolving over that period and could possibly become a new trend that we should look out for? Over to you, Ilana.
Yeah, thanks for that. And it's an interesting question. So I think we can see it's all a combination of factors. Initially, when the restrictions came in, people were working from home or living at work, I suppose, depending which way you look at it. The need to call like they used to maybe wasn't there as much. There was maybe people using home data in place of mobile data, not doing a commute as an example, and maybe using mobile data like they would have in the past. In Q2, then obviously as restrictions eased, we saw some demand come back. Now, there's another factor at play, and that's kind of from the competitive standpoint. I think you rightfully mentioned that, the disposable incomes were under pressure. The consumer wallet is under pressure. And thankfully, airtime is largely a commodity. People do need it. It's considered an essential. But there is choice in the market. Us against Airtel and Telecom. So there is a competitive standpoint that the consumers are looking for the best value for money. So I suppose in Q1 we feel we did lose some share to Airtel. You can see it in the market share numbers. And in Q2 we ran some successful campaigns that gained some of that share back because we offered promotions to customers that we deemed to be preferable to the competition. So I think it's a factor of both, the general economic situation and also the competitive situation. Back over to you, Marie.
All right, brilliant. So then what would you say you're seeing now? Are we getting to a point where you are saying the second quarter you did see recovery when it comes to looking at the M-Pesa revenue structure or just Safaricom's business operations? So are we seeing a change in terms of trends when it comes to consumers? Are they consuming more? Is there more of an uptick and demand for products such as Fuliza? Is anything materially changed, or are we sort of now going back to the norm from where we stand? Over to you, Ilana.
Yeah, thanks. So we've seen a general increase in the activity within M-Pesa. If I look at the volume of transactions that were free, say in April, and I compare that to September, there's a 60% increase, so a sizable increase. I think it speaks to A, the fact that it was free and people do like free, but B, a shift towards cashless and the convenience that M-Pesa offers. Also, obviously, as we're trying to fight a pandemic, part of the reason why the fees were zero rated was to discourage the use of cash in favor of something that's safer from that point of view. Things like Fuliza performed very well. We saw about a 50% increase in the daily active users. We saw about a 30% increase in the volume, also the value of loans dispersed. But thankfully, we actually saw the repayment rate increase slightly to 99.4%. And I think that speaks to the ubiquity that M-Pesa has, that to continue using M-Pesa, you need to repay if you've got an outstanding Visa. So to me, that kind of increase in the repayment rate speaks to the fact that, people, need M-Pesa. They like using M-Pesa. They find it convenient. One of the interesting behavior shifts that we did see was mainly in Q2. We've seen an increase in the deposits into our ecosystem and through our agents. And it seems it's a knock-on impact of the zero rating. So because it's free to transfer from the wallet to the bank account, people are using our agents for their convenience to transfer money into the ecosystem and then transfer to the bank account, which is free. Now that obviously put further pressure on our P&L from the point of view of the commission that we pay, especially because we don't make any revenue on deposits. But it's an interesting behavioural shift that we saw in the period, and it'll be interesting to see how that plays out and when we return to charging.
Okay, fantastic. Thank you so much for that overview of M-Pesa. You've actually preempted the questions that I wanted to ask around M-Pesa and Fuliza. Thank you for that overview. Now, when we look at the operational expenditure for Safaricom, what does Safaricom largely spend on, and how did this evolve over the last 6 months, and how did this impact the key margins, such as the earnings before tax and interest, earnings before interest and tax margin, as well as the EBITDA margin? Back to you, Ilana.
Yeah, thank you for that. So our key kind of expenses within operational expenditure would be people and the network would be the two main biggest areas. The people cost grew. Obviously, our people are the life and soul of the business. They're what keeps it running. What we saw in the period, obviously we had some savings, COVID related, travel as an example, offsite meetings, conferences, those sorts of things. On the flip side, we had an increase in costs relating to COVID, so PPE equipment for frontline staff as an example. We were aware of the impact that the zero rating was going to have on the P&L, and if you look at full year 20, you could already see that we were on a journey to kind of get more efficiency out of our cost base. So I think there was a combination of some reprioritization of where we spent. For example, publicity, we reduced spend on publicity, given the restrictions, etc. There was no need to do on-ground activations, as it were. There was also a continuation of the savings programs that we would have carried through from the previous year. And you can really see that in our network OPEX, which posted a saving, I'm very happy to say, in the period. So, those savings are necessary to safeguard the P&L as much as we can. We did it to alleviate the pressure on our contribution margin. And it's something we'll continue to focus on in terms of generating operational efficiencies that then we can invest back into the business to drive future revenue streams.
Okay, thank you so much for that. So when we look at the structure of how and what Safaricom spends on, outside of your operational expenditure, there's also the capital expenditure. How did that evolve over those 6 months? And what are some of the key lines when it comes to capital expenditure that you were spending on over the last 6 months? Back to you, Ilana.
Yeah, thanks. A great question, because I think interestingly, despite the decline that you saw in our top line and our bottom line, we actually accelerated CapEx in the period by 25.5%. We did it intentionally. Our view was that we needed to front load the investment so as to support as much we could the top line in terms of protecting it. And we're happy to say that in the 6-month period, we accelerated further our 4G coverage. We had an ambition to get to 100% population coverage by the end of the year. We're at 91%, which is up from where it closed in March. So a large chunk or a large portion of what we would have spent in half one related to that in terms of the 4G expansion. The other interesting thing that can be seen this year, especially if you compare to previous years, is the shape of our spend. So there's a shift towards IT type CapEx and away kind of from not away from networks, but in terms of the balance between the two, there's a shift towards IT. And that's kind of the direction we're going, that there's a lot we feel we need to do in terms of our system capability, automation, digitization. There was some investment in the period in the M-Pesa platform to facilitate faster product rollout and easier integration of APIs. So that shift, I think, we'll see stay with us as we now focus on the kind of supporting systems that support our business and how it functions, and a little bit of a shift away from the network, especially once we complete the 4G rollout.
Okay.
Back to you.
All right. Fantastic. Thank you for that overview. So in terms of numbers, you've given us the growth rates. Maybe you can just help us, for the purposes of our audiences, just to understand what are the absolute numbers in terms of the revenue, what was also the absolute numbers in terms of operating expenditure and capital expenditure. What were these numbers like?
So in terms of service revenue, we had 118 billion shillings. In terms of our profit, our EBIT was 45 billion shillings in the period. So yeah, 4.8% decline on the top line and 10.5% on the bottom line.
Okay, fantastic. So I'm coming to the almost finishing up on the financial analysis. Now, when we are looking at the tax rate, we did see a bit of reprieve extended to the business community at the onset of COVID-19. So this was from 30% to 25%. So how long does this apply for Safaricom, especially holding the fact that your year does not corroborate with the government's fiscal year? So if somebody's looking at this your financial outlook, are they applying 25% going forward? When does it go back to 30%? How do we unpack this? Over to you, Ilana.
Thank you. Yeah. So the current indication is that on the 1st of January, it's going to revert back to 30%. As you rightfully said, our financial year runs up to the end of March. So I think as that unfolds and as that gets gazetted, etc., we will be informed and guided by the KRA on that. But for purposes of planning or forecasting, we're using the higher tax rate from the 1st of January.
Okay, from the 1st of January. And which brings me to the last line on the income statement. I think I have two more questions on the financial outlook, and then I can touch briefly on strategy and what to expect going forward. So now a total 6% drop in terms of the profit after tax. Do you think this is going to continue for the next 6 months, or how should investors look at Safaricom today? Is it a company that's going to decelerate in terms of the earnings outlook? Is what we have seen today, is it sort of having everything to do with COVID-19 and could possibly improve going forward? How should companies look at it? Because we're coming from a company that has been growing by about 13% over the last 3-year period. Safaricom is the largest company on the NSE in terms of trading, in terms of market capitalization. We all understand that it was a tough business environment, but because the market is always forward looking, then how should investors sort of think about Safaricom? Is it a Safaricom that's emerging in a new business environment? Is it a Safaricom that's emerging with a new business model? What are some of the considerations investors should have when looking at the bottom line? Over to you, Ilana.
Yeah, thanks. And I can understand, people wanting to get a view of the forward view. So we guide on EBIT,
Okay.
not actually on net income. And if you look at the guidance that we've provided, so we delivered 45 billion shillings worth of EBIT in the first half. The lower end of our guidance has a little bit more than double that. So there's some acceleration already in the lower end of that guidance. And then the upper end of the guidance is 94 billion shillings. There's so many, I suppose, different factors at play in terms of the scenarios in terms of coming with that guidance. It's a little difficult to kind of forecast further out than that. We've obviously assumed that we'll return to charging in Q4. What is difficult to determine is the elasticity impact of when we do return to charging in terms of what will happen to the volume, because we are aware that there's an element of volume currently there that's there purely because it's free. So what we plan to do in terms of the investor base is probably in February, we will hold an investor call before we move into our closed period just to give an update of how we're performing or tracking against that guidance, because by then we should have a better view of some of these unknowns that are currently there. The other big one is how the economy recovers from COVID and how quickly that happens, and whether the country, will enter, a full-blown second wave. I mean, we've seen it across Europe. A lot of countries in Europe are gone back into lockdown. Obviously, if that happens, it'll change the outlook. But assuming, a second wave comes or doesn't, maybe it comes, but it doesn't impact too badly, then in the next financial year, we would expect to return to solid growth on the back of us returning to charging on M-Pesa.
Okay,
fine. Over to you.
All right, fantastic. We just take a short break. When we come back, we'll round up the conversation, talk about strategy, what other markets or products are Safaricom looking out for, and then we can end up with how to look at the dividend payout that Safaricom has been paying over the last couple of years. Remember, we are unpacking the results that Safaricom announced earlier this week on Monday, and these numbers were 6 percentage points down to 33 billion. We want to understand what these numbers mean for you, but we also want to extend an invitation to you to reach out to us and tell us what your thoughts are. What more would you like to know? Our SMS line 20146, or you could reach out to us on any social media platform at Metropole TV, or you could reach out directly to me at Mbithe Mwema. See you after the break.